Hello everyone. Our discussion for criteria for evaluation will be divided into different sections. First, we'll be talking about tools and the characteristics of these tools used to evaluate performance. We'll be talking about measurement and of course the importance of having a standard, no? Having standard tools for performance evaluation. Okay, so now before we go to the details of my presentation, let's talk about this. Okay, you cannot improve what you cannot measure. O, diba? If you want to improve on something, okay, you should be able to measure what you want to improve on, no? Like, for example, if you want to, let's say, improve your academic performance, you should be able to measure your academic performance. So, in our case, that's in the form of your grade, okay? Sometimes, okay, meron tayong New Year's resolution, no? The common New Year's resolution is that, I'm going to lose weight. So, if you want to improve on your weight, okay, dapat sinusukat natin yung weight natin, no? You cannot just say na, ay, magda-diet ako. Okay? And that's not enough, okay? You should be able to measure, no, the progress, and that is by using your weight. But then, sometimes, okay, nagkakaroon tayo ng problema kasi what you are measuring, okay, and the tool that you use may not actually coincide, no? Or it's not in harmony with your main objective. Like, for example, if your main objective is actually to lose fat, okay, I want to lose fat. Ayan. So, I will be weighing every 2 weeks or every month. Do you think your weight, well, of course, it can be measured, but do you think your weight is a good indicator of losing fat? Siguro, di ba? Pero malay mo, nakabawas ka nga ng fat, nag-gain ka naman ng muscle. So, you might not be losing weight, okay? But you're actually becoming healthier. So, if you want to lose fat, you might as well use your fat percentage, no, as an indicator. Or if you just want to lose fat to look good, o diba, baka waistline siguro, baka yun, no, yung mga pwede mong mga indicator, yung mga sizes ng damit. Sometimes, no, we use weight as an indicator of our overall health and performance. So, talking about performance, no? What kind of performance are we talking about? Okay, maybe your speed in running, or maybe your endurance, or maybe your strength. Then, if that's the case, your weight is not a good indicator. If you want to improve your speed, you might as well use your GPS na lang, no? Takbo ka, and then you record your mileage and your speed, okay? Or for example, if you want to measure your performance in terms of strength, okay? Ang sukatin natin yung weight na kaya nating buhatin, hindi yung weight ng katawan natin, okay? Sometimes yung mga New Year's resolution natin, sabi natin, I just want to be healthy. Okay, so weight may be a good indicator, pero kung overall health naman yung usapan, baka mas maganda pag blood test na lang, no? You get an initial blood test for you to have a baseline, and then periodically you get your blood test, ganun, so that you can compare. Sukatin mo yung cholesterol, especially your LDL, ganun, yung blood pH siguro, okay, or maybe you can measure your VO2 max, yung mga ganun, or yung blood pressure mo, okay, and so on and so forth, di ba? Ganun din, gaya rin doon sa grades natin, okay? Some, they use their grades as an indicator of mental performance. Take note, magkaiba yung academic performance and mental performance, okay? When we say mental performance, dapat yun yung sinusukat natin eh. This will be manifested by siguro how fast you are in solving accounting problems. Ganon, okay? Or let's say how many concepts can you understand, okay? Better yet, not just understand, no, but how many topics can you discuss and deliver, okay? So, not just memorize, pero you can discuss it with your classmates. Dapat ganon. Don't use the grade, no? Because your grades, okay, are affected by a lot of factors. Okay? Pag minsan magkaiba yung instructor mo, no? You cannot say that, I'm improving in financial accounting. Why? Because last semester, my financial accounting 1, my grade is 86. And this semester, financial accounting 2, my grade is 90. O, di ba? Kung magkaiba yung instructor mo, okay? Or you cannot just say na, kahit pareho yung instructor, kung madamot lang talaga yung instructor, kaya mababa yung grade mo. Okay? Or mataas yung grade mo, pero malay mo, hindi mo lang talaga kasing, sorry for the term hindi mo lang kasing bobo yung mga classmates mo, kaya ikaw yung may pinakamataas ang grade. Yung mga ganung bagay. A lot of factors can be considered, no? Like, especially now, online class tayo, it's so easy to cheat. Okay, malay mo, mababa yung grade mo, 84, pero at least sa'yo, hindi ka naman nag-cheat. Yung iba, 90 plus, pero ang taas nga ng grade, pero nag-cheat naman sila. Okay, so yung mga ganung bagay. Aside from that, no, there are other factors like, for example, your current situation, mahina yung internet, maya't maya may brownout, okay? O kaya habang nag-aaral ka, nagbabantay ka ng sari-sari store or nag-aalaga ng bata. Okay, so all of those are factors which may affect your grade. So I'm not saying that using your grade, no, as a measuring tool, okay, is bad. Okay naman. It's just that there are other tools, no, other means on how you can assess your performance. Okay? So going back to this slide, sabi, you cannot improve what you cannot measure. Not just what you cannot measure, but what you cannot measure properly. Okay, so if you want to improve something, you should be able to measure that. If it cannot be measured, look for indicators which can be measured. Okay, so that's one. And then, number 2, okay, what you cannot measure, you cannot control. Okay, or what you cannot measure, you cannot manage. Okay, so you cannot manage your weight if you're not measuring your weight. Okay, you cannot manage or control your grades if you are not measuring your grades. 'Di ba? Tama naman, hindi lang naman kayo yung nagme-measure ng grade, no? Daming factors, pati si teacher. Ayan, pag minsan teacher factor daw, kaya ganun yung grade. So ano yung i-measure mo dapat? Yung variables na nako-control mo. Okay? So basically, yung discussion natin, okay, in this section focuses on measuring tools. But before we continue, I just want to emphasize that our focus for this discussion will be on the characteristics of this criteria, no, the characteristics of these tools. And we are not going to compute anything, okay, in this presentation. Okay, so let's start. Okay, how do you establish a criteria? Ayan, how do you establish a tool for measurement? First, okay, this tool, ayan, or this criteria should be objective. This means that it should be free from bias and scientifically or mathematically measurable. Okay po? Ayan. Siyempre, pag sinabi nating objective, hindi siya subjective. Okay? And then, number 2, it should be familiar. Okay? You know the concepts affecting this tool. Okay? You know how to interpret this. This should not be a new tool to you. Okay? Ayan. And then, it should be well understood. It's not enough that you're familiar with the tool, but you should be adept. Kumbaga, kayang-kaya mo i-interpret yung tool kahit bali-baliktarin mo yan. Okay, and aside from that, okay, it is accepted. Ayan. Sa niya, accepted measures of performance. Okay. Kumbaga, parang nagamit na to sa industry. Okay, it's already used by your competitors or it has been used in the past, okay, by those who are in the industry. Okay, so that's how you establish the criteria for evaluation. Why do we need to consider these characteristics? Okay, 2 reasons. First, the ultimate responsibility of the board, okay, is to understand the impact of a given strategy on the value of the owner's investment. If you remember finance, di ba? Value of owner's investment. In Finance 1, in financial management, it's always emphasized that the ultimate okay, or the primary goal, ganun pa, the primary goal of a corporation is to maximize the shareholders' wealth. Eto yun, no? Okay, the board of directors, especially the board of directors, okay, so ayan, dapat they understand the impact, okay, or the implication of a decision or a strategy, okay, in the value of the owner's investment, okay, doon sa value ng shareholders wealth, which is most of the time, okay, indicated by the market value of the stock. Okay po? This obligation implies evaluating performance in financial terms. Sir, bakit ganun? Bakit financial terms in terms of money? Take note, ano ba? Paano ba natin mini-measure yung owner's investment? Di ba? In terms of money. Okay, and why do they invest? Okay, nag-i-invest sila because they want a specific return. Okay? Ganun po yun. Now, if they make an investment and then without expecting any return from the company, medyo abnormal yata yun, no? Baka hindi na yun investment, baka hobby lang siya. Okay? So, sir, what about the maximization of strategic value? Okay, well, that is a better objective, no, for a company. Sabi kasi natin, well, initially, maximize profits. Okay, but then profits does not consider the timing of your cash flows. It does not consider the risk involved in the decisions, okay, and the risk attached to the cash flows. Ganun po tayo sa finance and management, di ba? That's why a better objective for the company should be maximization of shareholders' wealth. Ayan. Okay, increasing the value of the owner's investment. Okay, but then again, there's a better objective, maximization of strategic value. Okay, which includes monetary and non-monetary items. Okay, yung value ng company in the long run, yun yung strategic value. But then again, okay, when it comes to criteria for evaluation, sabi natin, we cannot improve what we cannot measure. And what we cannot measure, we cannot control. So we stick to what is measurable. And most of the time, what is measurable are those that can be measured in financial terms. Malinaw po? Okay. Second, okay, we have to consider these characteristics. Okay, yung characteristics, yung nasa previous slide. Ayan. Okay. We have to consider this because it is inevitable, sabi niya, that much of the evidence of the success of an evolving strategy, oh, that's my favorite term, ayan, evolving strategy is subjective, di ba? Hindi natin maiiwasan yan. Meron mga tools, okay, that are subjective in nature, okay? Or, ayan, sabi nga niya, asa na yun? Ayun, evidence of the success of an evolving strategy is subjective. Sabi niya, managers' familiarity, that's number one. Familiarity, okay, with the details, okay, of product market and company-specific issues and access to an incredible amount of variety of data give them an advantage over outside board members. So, we're talking about board members. Dalawa lang naman yung emphasis sa statement na to. Number one, the familiarity of the data, and number two, the availability. Familiarity and availability. Okay, so because you are a board member, okay, it is expected that you are familiar, no? You should be familiar with this information. And because you belong to the top management, okay, maraming data ang available sa'yo. Okay, so imagine, no? Imagine if you can understand the data and you have a lot of data that is available to you. This gives you an advantage to, advantage to what? Well, number one, advantage to make a decision. Advantage, no, in understanding the tools that are used in performance evaluation, no? And of course, balik tayo sa statement number one. An advantage in understanding the impact or the implication of a strategy or a decision in the shareholders' wealth or the value, no, to the value of the owner's investment. Ayan. So, ito yun. If you try to put things together, okay, so, as board of director, marami kang naiintindihan na data. And then, there are a lot of data that is available to you, no? Imagine, no? Ano to? If you try to put this together, and then, okay, you have objective data that is consistently presented and reinforced, okay, by the cumulative evidence of past performance. Anong mangyayari? Okay, sabi niya, it can strengthen the power, not just the power, but also the credibility of the board's opinion. Well, wala namang mali na opinion. An opinion is still an opinion. Pero take note, no, if you're going to compare, let's say, the opinion of someone who can understand a lot of data and someone, okay, who has access to most of the data, diba? And then you compare that with someone with limited understanding and limited access to data, kanino ka makikinig ng opinion, diba? Parang kwan yan parang Facebook, no? Daming mga experts sa Facebook. Yung iba talagang nagbabasa, okay, ng mga sources, tinitingnan nila kung legit yung sources, iniintindi nila. And then yung mga ibang nagbibigay ng opinion, may nakita lang na meme, ganon, isa or dalawang meme na, oo nga no, di ba? Na-realize lang nila, oo nga no, tama nga no. Tapos yung picture sa meme, nagko-coincide pa doon sa na-feel nila at the time na binabasa nila yung meme, ayan na, bigla na silang naging expert. So, kanino ka makikinig ng opinion? O, di ba? And then, standard financial indicators facilitate discussion in terms all parties, meaning all members of the board of directors, can understand. So, if all of these members of the board, no, has hindi naman enough, has substantial knowledge to understand the data that is available, and they have enough access, substantial access to relevant data, it's easy to come up with a standard tool, no, standard financial indicator that they can use, okay, in evaluating the performance of the company. Okay, so ayun yun. Two important criteria, characteristics. Okay? So, sabi niya, first, the tool should focus on sustainable rate of return on shareholder. Bakit na naman nandito ang rate of return? No? So, ang dami na nating discussions sa financial management, investment management, pagdating dito sa rate of return. Bakit eto na naman yung focus? Well, number one, it's measurable. Not just measurable, but measurable in terms of money. And then again, kaya nag-i-invest yung mga owners natin because there is an expected return. Tama? That's how we define investment. If you go to, let's say, financial accounting, basic financial accounting textbooks, and you look for definitions for investment, most of the time makikita mo dyan yung term na commitment. Okay, investment is a commitment of funds, no, with an expected return in the future. Okay, so that return may come in the form of income. Ayan, and there are different kinds of income na na-discuss na sa ibang subjects. We'll try to review some of those later. Okay, pero number one, it should focus on the rate of return on shareholders. Bakit? Nag-i-invest sila kasi gusto nila ng return. Okay. And then number two, it should permit objective comparisons, okay, among companies' separable income streams and with alternative investments in other companies inside or outside the industry. So, ano yung tatandaan natin dito? Number one, it includes the concept of return. And then number two, okay, yung concept ng comparison. Okay, so you should be able to compare, okay, a company performance. Siguro, time series analysis. Now, when we say time series in other subjects, this is when you try to compare the performance of a company, okay, at different points in time. Or maybe something that is cross-sectional at one point in time lang pero different aspects or different operations. Okay? So yun, it could be historical in nature, no? It could allow you to compare companies within an industry, ibig sabihin you versus your competitors, or maybe companies even that are located outside the industry. Okay, so ibig sabihin, okay, they may not be necessarily your competitors, okay, pero you just want to have a benchmark, ganun. So, ibang industry. Okay? Ayan, now if you try to put things together, that together with the previous slide, okay, one of the things that you have to remember is that, nakasulat na dito, the board determines whether the company's chosen strategy or a particular decision will contribute to a long-term return of shareholder investment equal or superior to other investment alternatives of comparable risk. Now, if you go to investment management and corporate finance, okay, even in financial management, okay, return and risk. If you remember axiom number 1, di ba? The higher the risk, the higher the return. Okay? Pero hindi lang yun yung concept ng axiom number 1. When we say axiom number 1, most of the time, ang pagkakaintindi natin dito, well, there are different investments. And these investments will offer different levels of return. And we expect that an investment that offers higher returns, okay, will also provide, okay, or will also expose us to higher risks. That's why it is not realistic, no, to encounter an investment, okay, promising high levels of return pero sasabihin there is very low or zero risk. Nako, pag ganun yun, malamang scam yan. Di ba? So, if you try to go back, no, ano po yung mga returns na yan? Although, there are different kinds of return, no? May psychological return, may monetary return. For our discussion, we just focus on monetary return. Dalawang klase po yan. You have your current return or current income, and then you have your capital gains, okay? Also known as your paper gain. Ayan, na i-discuss natin mamaya. Pagdating naman sa risk, okay, risk is actually the variability of return. So, the higher the variability, okay, or possibility, sabihin na lang natin the range of possible returns, no? The wider the range of possible returns, the higher the risk. Okay, so yun, ang axiom number 1 na pagkakaalam natin, different investments with different returns, and the higher the return, we expect higher risk. Okay. Pero if you try to read other textbooks, or if you want to understand more, actually hindi lang yun ang axiom number 1 eh. If you try to put these things together, no, okay, mababasa mo na naka-imply, sasabihin sa axiom number 1, investors are not going to accept additional risk unless they are compensated by additional return. Kaya nga, yung focus natin dito ay, ayan, doon sa rate of return ng shareholders. Because this rate of return or this return will compensate the risk that they are absorbing. What risk? The risk of being a shareholder. Okay, what are the risks attached, okay, to being a shareholder? Okay, yung risk na mawala mo yung pera mo. Okay, so ayun na, baka bumaba yung value. The risk that the value of your investment may be lost. Ayan. Or the risk that you may not be getting your expected rate of return. Okay? And then when it comes to decision making, okay, madali lang yan eh. Okay, given the same level of risk, you choose the investment that has the highest level of return. You want your returns to be higher, di ba? But given investments with the same level of returns, you choose the one that has the lowest risk. Kasi gusto natin ng mababang risk. Kaya nga lang, the higher the risk, the higher the return. Or the higher the return, the higher the risk. That's why we call it the risk-return trade-off. Okay, you cannot have the best of both worlds. May trade-off yan. Kung gusto mo nung mataas na return, masaya ka, kaya lang you should be expecting higher levels of risk. So, nakakalungkot yun. Or kung gusto mo ng mababang level of risk lang, masaya ka sa mababang level of risk, dapat, okay, i-accept mo na magiging mababa lang yung return mo sa investment na yan. Okay? So, ulitin natin, why is the concept of risk-return important in this situation? Number 1, your tools, okay, will be based on return. Okay? Our investments is based on the risk-return trade-off. Ano yung trade-off na yun? Okay, we expect additional returns for every additional risk. We choose the investment with a higher return given the same level of risk. Okay, or we choose the investment with the lower level of risk given the same level of return. Sir, what if? Yan. We have different investments. Iba-iba yung investment na available sa atin. Magkakaiba rin yung level ng return nila at magkakaiba rin yung level ng risk nila. Which is more realistic, di ba? Yun naman talaga yung nangyayari. It's seldom that you see different investments with the same level of risk, but they have different levels of return. Okay? Or, it's seldom that you see investments with the same level of return, pero magkakaiba yung level ng risk. Okay? Pag kakaiba yung level ng risk ng mga yan, you expect na magkakaiba rin yung return ng mga yan. Okay? So, paano ka gagawa ng decision? Okay? Meron tayong tinatawag na coefficient of variation. If you're going to review your investment management, your return is actually the average rate of return. Most of the time, in statistics, yan yung symbol natin ng average, di ba? And risk, since it is known to be the variability of return, that's now the standard deviation of your return. I'm just using K, no, as a symbol for return, no. In some books they use R, in some books they use I. Okay, I just want to use K. Okay, so paano pag ganun? Magkakaiba sila ng return at magkakaiba sila ng risk. Dito na uso yung tool na coefficient. Ngay, ano yung nangyari? Andito tayo sa establishing criteria. Oh, wait lang. Ayun, dito tayo. Okay? So, nauso yung CV, coefficient of variation. Ano to? Okay, your coefficient of variation is actually your risk for every level of return. So, you divide now the standard deviation or your risk by the average rate of return. Ayan. Okay. So, when do you compute for CV? If there are different investments with different levels of return and different levels of risk. Okay. And the lower the CV, the better. Kasi ang computation na ng return dito, it's not the return attached to the asset or the return attached to the investment, but it's now the, it's not the risk attached to the asset or risk attached to the investment, but this time it is the risk for every level of return. Okay, so reviewin niyo yan from your other subjects. And then they should also allow a comparison of the promise of future returns with the reality of past performance. Okay, so ayan, mamaya babalikan natin ito pagdating natin sa mga tools. Okay, as of this point, kung isa-summarize ko tong slide na to, ano yung kailangan mong tandaan? Well, the tool should focus on the returns to the shareholders kasi yun yung ina-expect ng shareholders. And then number 2, it should allow us to make comparisons. Ayun lang naman. Okay po. Now, in the final analysis, okay, ito parang comment lang to, no? This criteria should reflect a fundamental economic reality. Ano yun? Long-term loyalty of equity holders depends solely on sustaining a competitive return on investment. Sounds familiar, di ba? Okay, actually, offshoot lang ito ng axiom number 1. Yung the higher the risk, the higher the return. Risk-return trade-off. Yung sinasabi doon na investors will only accept additional risk if they are compensated by additional return. Okay? And when we talk of risk, ang dami mga elements ng risk, di ba? Materiality, exposure, and then most especially your time. Diba? If you try to go back to our previous discussion, which is riskier, okay? You tie up your investment of 100,000 to an investment with a life of, let's say, or with a duration of 6 months, or to an investment, 100,000, with a duration of 10 years. Mas mataas yung risk ng 10 years. So, if you try to apply that, no, time as an element of risk, sabi dito, the long-term loyalty, so ibig sabihin, time, of equity holders depends solely on sustaining a competitive return on investment. So if you want them, no, if you want your investors to keep on exposing themselves in the company risk, di ba? Kailangan you should be able to provide competitive return on investment. Kumbaga, kailangan nating matugunan yung mga pangangailangan nila. Okay, dahil kapag nagkulang yung mga yan, okay, what will they do? They are going to look for other investment. Okay, which will provide their expected rate of return. Okay, something that is competitive. Yan. Something that can compensate for the risk that they are willing to give up. Parang cost-benefit lang yan, di ba? The benefit should be higher than the cost, or the benefit should justify the cost. It's what you call cost-benefit analysis. Di ba? So, parang love life mo lang yan. Okay? Pag hindi mo matugunan yung pangangailangan ng mga investors mo, maghahanap yung mga investors mo ng ibang investment. Okay? Kung feeling mo ay parang investment yung love life mo. Kung lang naman. Anyway, so, basahin pa natin, without that, no product market strategy is safe. Although professional managers might find this dictum hard to accept, it is nevertheless the reality of the public capital markets in which they operate. Di ba? So, ibig sabihin nun, talagang ganyan. The value of an investment is based, okay, on the present value of all future cash flows. So, pag sinabi nating public capital markets, yan na, ito na yung mga publicly traded stocks, and their value is actually dependent on our expected inflows, okay, or future future na nga, expected pa, or future cash flows, or future benefits. Ganun naman talaga That's how you value any commodity. Bakit mura lang to? Baka mababa lang yung pakinabang mo dyan. Okay, o bakit ito masyadong mahal? Kasi ito yung pakinabang mo dyan. Okay po. Aside from the effect of demand and supply, of course. Pero mamaya pag-uusapan natin yan. Just doing better than other immediate investment alternatives. Okay, better than last year, or even better than all major competitors in the same industry, may not, in the end, be good enough to justify continued investor support. Okay? Not because you are better. Okay? Not because you are operating better. Mas mataas yung profits mo, mas mataas yung cash flows mo, but if you cannot provide the needs of the investors, your investors will not be loyal. Okay? O, yan, kahit ikaw pa yung pinakamatalino, ikaw pa yung pinakamaganda, pinakamabait, pero hindi mo maibigay yung pangangailangan ng... Okay, let's continue to read this. Ayan. Sabi na, may notes sa baba. Ayan. Action number 1. Okay, so, before you proceed with other slides, dapat malinaw na kabisado mo yung implication ng action number 1 in this slide. Okay? And then also, the concept of demand and supply. Why? Because may effect kasi yan sa value ng stocks, okay, that are publicly traded. Okay? You should also know what is risk tolerance. Naku, psychology, no? Risk tolerance and the cost benefit. Okay? Paano ba to? Paano ko ba to isi-simplify? Maybe we can continue on a blank slide nga muna. Let's try this. Okay. Let's see. Ayan. Okay, balikan natin Okay. Some concepts that you have to remember. Action number 1, na-discuss na natin kanina. Demand and supply, risk tolerance, and then you have your cost benefit. Let's talk about risk tolerance muna. Okay, let's try to review this. Paano ba yung risk tolerance? Okay. Risk tolerance is actually the level of risk, the maximum level of risk that one can tolerate. No? Kahit sabihin natin na ganito, paano ba ako mag-drawing dito? Sabihin natin na ito yung graph natin. The higher the risk, the higher the return. Sabihin na natin na yan yung level ng risk. Ito yung return natin. Sabi na axiom number 1, ganyan daw. So, the higher the risk, the higher the return for some investments. Okay? Now, for investors, meron tayong tinatawag kasi na different types of investors according to the risk, no? Yung risk attribute nila o risk profile. Meron tayong tinatawag na risk indifferent, yung wala silang pakialam kahit na anong level of risk yan, mataas man o mababa, basta na-accept lang nila yung expected rate of return nila. You also have your risk seeking, wherein investors, okay, prefer higher levels of risks. Okay, they expect higher levels of risk, ayan, with lower levels of return. So, may mga ganyan, pero most of the time, ang nagmamanifest sa market ay ganyan. Okay, so you have your risk-averse investors. Investors who expect additional return for investments with additional level of risks. So, may nagtanong sa akin noon, Sir, paano naman yung risk-taker? Okay, so ano yung graph ng risk-taker? Ang risk-taker, risk-averse din yan. It's just that mas steep lang siya. Okay? So, paano po yung risk-taker? Ang ang kabaliktaran ng risk-taker, eto yung mga extremely risk-averse. Okay? Yung mga avoiders. Kunyari ganito, eto si Mr. A. Okay, so yan yung kanyang risk-return profile. Okay? Ayan. Kasi ito si Mr. A. Ito naman si Mr. B. Now, if you notice, parehong tumataas yung expected rate of return nila every time na tumataas yung level of risk nila. Okay? So, at this level of risk, ito yung expected rate of return ni A. Ito naman yung expected rate of return ni B. At this level of risk, ito yung expected rate of return ni A. Ito yung expected rate of return ni B. Okay? It's just that si B ay risk taker. Kumbaga, at the same level of risk, mas malaki yung kayang i-take ni B na level of risk. Ulitin natin. Okay? For B, B is an individual who is classified as a risk taker. Why? He is willing to accept. He's more tolerant, kumbaga, okay, of higher levels of risk at the same level of returns. And ngayon, mayroon tayong tinatawag na risk tolerance, no? May maximum yan. So, for example, this is the level of risk, this is the level of return, so this is Mr. C, or si Mr. B na lang, si Mr. B, the higher the level of risk, the higher the level of return. Kaya nga lang, at some point, nagiging mas averse siya kasi hindi na niya kaya yung level of risk hanggang sa patas ng patas, hanggang sa straight line na yan. Bakit? Kasi hanggang dito lang yung kaya niyang i-accept na risk. Even if you give him additional returns in compensation with additional risk. Okay po? Yan. So, eto yung kanyang level of risk tolerance. Okay. So, ganun po yun. Okay. Now, if you try to understand that and then you put that in hindi. Before we continue, let's discuss your economics. Let's go to economics. Do you know this very easy graph? Diba? Pag nakakita ka sa economics, you have this demand and supply, di ba? This is the point where the demand and supply is equal. So, ito yung tinatawag natin na equilibrium. Okay, that's your equilibrium quantity. And where the demand curve meets the supply curve, that's daw the price or the market value of the commodity. Okay, so sabi na, the lower the supply, the higher the price, or the higher the demand, the higher the price. Not necessarily, no? Dapat yung interaction ng demand and supply. Take note that the value of a commodity is affected by the interaction of the demand and supply. Which means that, okay, kahit tumaas yung demand, kung tumaas din lang naman yung supply, nag-shift din lang naman yung supply mo. Okay? Balikan nga natin. Wait lang. Para hindi tayo malito. Okay? So, dito tayo. Kunyari, nag-shift yung demand. Tumaas yung demand. Meron tayong shift to the right. Pero tumaas din yung supply. Ayan. So, ito yung bago mong demand. Ito yung bago mong supply. Diba? Pareho pa rin yung price. Magbabago nga lang yung equilibrium quantity mo. Okay po? So, dalawa palagi yan. Okay? Now, siguro, yung sinasabi nila, the higher the demand, the higher the price. That is, if when supply curve did not move. Okay? So, for example, ganito yan. Reviewin lang natin na this is not actually part of our subject. Ayan, so, you have here the supply curve. And then, you have here your demand curve. Ano ulit to? This is not your break-even point, ha? It's called the equilibrium quantity. Okay, the equilibrium quantity is the quantity where the supply and the demand will meet. Okay, ulitin natin. This is your equilibrium price. In accounting, this is also known as the market value. Okay, so if there is a shift in the demand, yun na lang. Assuming that the supply did not move. Okay, so that is now your demand 1. Because there is a shift in the demand, we expect that the market value will also increase. Okay? Or, for example, dito tayo. Let's say that this is your supply curve and this is now your demand curve. Okay? EQ. And then you have here the price. Okay? So, for example, there is a shift in the supply curve naman. Tumaas yung supply. What will happen? No? Tumaas yung supply. Bababa yung price. May bababa yung price. So, ito na ngayon yung supply natin. Okay? So, the value of a commodity which is also applicable to stocks. Okay, the value of stocks is highly dependent on the interrelationship of demand and supply. Yan. Kaya nga kapag bumaba yung supply kasi bumili ng treasury shares, for example, yung company, okay, so kukunti na yung being traded, tataas yung price kasi bababa yung supply. Or for example, gaya nitong mga nakaraan lang, ayan, hindi ko na sasabihin kung anong stock, pero may mga grupo kasi who are trying to hype. Pag sinabing hype, they trying to spread false information, which will increase the value of the firm. Okay? Paano yun? Increase the value of the firm. Kasi it's going to create new demand. Ay, ganun ba? Okay, ito pala yung potential ng company na yan. Okay, nabalitaan ko, ito yung kaya niyang ibigay sa mga investors. Okay, dumadami yung kanyang profits and projects. Okay, so the demand will increase. So the market value of the stock will also increase. Okay, so yung mga ganun. Now, if you try to put that together with the concept of risk and return, tsaka yung minimum required returns natin, okay, baka maging familiar sa inyo yung graph na ganito. Diba? So, this is now your debt ratio, which can also affect your risk. Tama? And then, you now have the value of the firm. Yan yung symbol niya, parang letter V. The value of the firm, which is highly dependent on the interrelationship of demand and supply. So, habang mas mataas yung risk, mas mataas yung magiging value ng firm. Kasi the higher the risk, the higher the return. Okay? So, balikan nyo yung mga discussions natin dyan in other subjects. Pero as of this point, I think I have a discussion also in YouTube. I'll just give you the link in our Canvas, doon sa discussion on solvency analysis. Okay? But anyway, ganito yan. Tataas yung value ng firm because of more demand, pero because of risk tolerance, syempre, the higher the risk, the higher the return. Sometimes, dahil masyado nang mataas yung risk na provide natin, they're going to expect, mga investors natin, they're going to expect higher returns. And if we cannot provide the return, if we cannot provide the return, hindi na tayo competitive, hindi na natin matugunan yung pangangailangan ng mga investors natin. Bababa yung demand for our stocks. Kung bababa yung demand for our stocks, magkakaroon siya ng shift to the left. What will happen to the market value? Kaya bababa yung value ng stocks natin. Okay, so that's how important, okay, the return is, okay, the role of return, okay, in evaluation, or in not just in valuation, no, but in analyzing the performance of the company. Okay, so ayun, sa atin, as much as possible, you want your value to be at its highest. That is an indicator that we are able to provide returns, okay, na competitive, and these returns are enough to compensate the risks that your investors are absorbing. Okay, so let's continue. Different strokes for different folks. Board members will find that several criteria satisfy the basic requirement of a strategic review process. Okay, maraming tools na available. Maraming tools that could satisfy this criteria. Okay? And one of the tools which is most of the time used is your, syempre, return on investment. Okay? Sinabi dito, particularly when it is disaggregated into its primary components. It has the advantage of being based on data familiar to shareholders and management. It shows profit per unit of sales. That's the profit margin. Okay, you have the asset turnover, and of course, you have the leverage. Sounds familiar? Okay. Pag nag-DuPont analysis ka, I will also give you a link to DuPont analysis. Okay, na-discuss na natin ito. Pero just to give you an idea, ano ba yung sinasabi niya na ROI? Okay, into its different parts. Okay. Yung return on investment kasi, or return on equity, can be initially divided into two. You have your return on asset, okay, and you multiply that by your financial leverage multiplier. Okay, there's actually a story behind this. Okay, it's not times FLM. Originally, sige na nga, magkukwento na ako. Originally, it is divided by equity ratio. But then, naging times 1 over equity ratio. You know, if you try to divide a ratio by a ratio, you simply multiply that by its reciprocal, dapat. Okay, and then because they just don't want to use the term reciprocal, they gave this a name. They call it equity multiplier. Okay, now to emphasize the role of leverage, okay, naging times, instead na 1 minus equity ratio, it's na 1 divided by 1 minus your debt ratio. Ayan. Okay? So now, your ROI has the following components. Return on asset, and actually this one, financial leverage multiplier. Okay? This one has something to do with leverage. There's a different discussion on that. Okay? And then, ROA, it has something to do with your operating performance. But wait, there's more. Yan. Your ROA can be further divided into two components. Okay, you have your total asset turnover times your net profit margin. Okay, so your net profit margin is actually computed by dividing your net income, pinaka-basic to, net income divided by your sales. While your total asset turnover, you have here your sales divided by your average total assets. Or simply total assets kapag hindi available yung average. Okay? If you try to multiply that, you are going to cancel this out and you will be left with net income divided by average total assets, which is the formula for ROA. Okay? So if you try to understand this, ito yung sinasabi nung previous slide. Okay? if it is divided into different primary components. Those are the primary components. Leverage, profitability, and this one has something to do with asset efficiency. Kunyari, tama yung spelling ko. Yan. Kunyari, maganda rin yung sulat ko. Okay, so, ayan. So, you have this, no? Kaya siya palaging ginagamit. Bakit? It's just one ratio. Pero, okay, pero it can be used as an indicator of leverage, profitability, and asset efficiency. Okay, your ability to generate profits, okay, from your assets. Ayan. But there are some comments with this approach. Let's just continue. Some comments, it may be subject to random changes in accounting practice, okay, so that users may have to make appropriate retroactive adjustments to the raw data. Take note, one of the features, no, of a tool used in evaluating performance is that it should allow us to make comparisons. So if there are changes in accounting practice, baka magbago yung computation mo ng net income. Ayun. So that's one of the comments. So you have to make certain adjustments. Aside from that, it doesn't provide an external standard of comparison. The underlying components of this corporate income stream need to be broken out and comparable data on companies inside and outside the industry gathered. Ano ibig sabihin nito? It depends on the industry, number one. The nature of operation, di ba? Some, not just accounting practice, but yes, kasama yung accounting practices and procedures, yung mga standards natin. Okay, all of these will be taken into consideration, okay, if you're going to compute for the entity's net income. Kaya it may not be a good tool for comparison. Yan. Aside from that, the data of review should also encompass information on investor response, okay, including price to earnings and market to book ratios. And wala ito sa ROI, okay? That's why in some books, no, lipat tayo dito. Balik na tayo. In some books or in some discussions, okay, aside from ROI, eto para lang ma-address, okay, yung weakness ng ROI na to. Meron kasi tayong tinatawag na retention rate. If you've heard of retention rate, okay, RR, ratio. Retention rate, also known as your plowback ratio. Okay? This is how much is being left to the company after distributing the dividends to owners. No? Dividends is a form of return. Tama? So, consider natin yun. So, the easiest approach or the easiest formula, no, for the retention rate or plowback ratio is actually 1 minus your dividend payout. Everybody knows what is dividend payout. Your dividend payout is computed by dividing your dividends per share, okay, by your earnings per share. But there's another way to compute for the dividend payout. Meron kasi tayong valuation trinity na, well, invento ko lang yun, valuation trinity ratios. Okay, so you have your price earnings ratio. You have the price earnings ratio, you multiply that with the dividend yield. The price earnings is actually the market value divided by the earnings per share, okay? And the dividend yield is actually the dividends per share. Divide that by the market value. So imagine, nandito yung market value natin, which is affected by the demand and supply. Okay? Demand and supply of your stocks. Okay? Ito na yung tinatawag natin na external tool. Okay? This is when you try to consider the reaction of investors with the changes that happens, okay, under your return on investment. Sabi niya, yun yung problema sa ROI. It doesn't include the changes here. Okay? Pero tignan nyo mabuti ha. Kung nagbago yung sales, nagbago yung profitability or yung leverage, okay, maapektuhan yung demand for the stocks. And that will now affect the market value. Aside from that, your profitability will affect your earnings per share because the higher the profitability, the higher earnings per share. And higher earnings may, I'm just saying may, because it's not a guarantee, no? Higher earnings per share may result to higher dividends per share. Okay? For those who haven't taken up MAS, no, we all know that dividends per share is what you are actually receiving. Okay? While earnings per share is what you are earning. And most of the time, dividends per share is lower than your earnings per share. Ito yung actual na binibigay natin sa kanila. Pag minsan, DPS versus EPS, if you're going to value or if you're going to make your decision, most of the time we use the dividends per share because this is what you actually receive. Okay? So if you go back to our previous slide, no, the loyalty, long-term loyalty of the organization depends on their return. This is one of the components of the return. But anyway, let's try to put this together. If you try to multiply these two, okay, mawawala yung market value, you will get DPS divided by EPS, and that is actually the dividend payout. How much you are receiving for every 1 peso of your earnings. Okay. Why am I discussing this? This is actually one of the weakness of ROI. But if you multiply ROI with your retention rate, you now have a new ratio. Kaya prino-promote ko to eh. This is now your growth rate. Okay, so sa dinami-dami ng mga ratios, you can actually forget all of this and you can focus on growth rate. Okay? These are internal ratios. Bakit internal ratios? Most of the time, they are based on internal, not just hindi naman internal information, but information coming from the operation of the company itself. Okay? These ones are affected by external entities, no? Yung expectation ng market. Ayan. Yung ina-expect nilang pwede mong ibigay sa future. Okay? So, kaya meron kang market value dito. So, para ma-reconcile mo siya, di gamitin mo na lang yung growth rate. Okay? As one of the tools to evaluate performance. Okay po. There's also a different discussion to this. Ayan, ibigay ko na lang sa inyo yung link doon sa canvas natin. Okay po. Review lang naman to coming from other subjects. Now, let's continue. Ito, nabasa na natin yan. Ito, diba? Sabi niya, including price to earnings, your PE ratio. Market to book value, nandiyan na naman yung market value, tsaka price. Actually, yung price, most of the time, that is also the market value. Okay po. They are an essential supplement to any measurement based primarily on company-specific data. So, let's go back. Ito yung sinasabi natin na internal or company-specific kasi siya. And to supplement that, you use these ratios. Pero, bakit supplement lang when you can actually use them, no, at the same time and come up with one tool, okay, which links the two groups of ratios, no, yung company specific at saka external ratios na yan. Other criteria, okay, eto may mga computation ito, okay, but it will be discussed in another topic para may di-discuss pa tayo, no, sa future, okay. But this one is actually your assignment. Okay, before I give you the discussion or before I upload the discussion, I want you to read on the following tools. What is your cash flow return on investment? Ayan, what is your EVA and what is your TSR? Okay, spoiler, okay, just to give you an idea, parang return on investment lang to, no? It's just that it focuses on your cash flows para maging mas comparable. Aside from that, it eliminates the effects, no, of taxes, and aside from that, you will just focus on your operating cash flows. Okay, so di ba mas magandang basis yun because axiom number 3, cash not profits is king. Okay, so that's now your cash flow return on investment. Okay, you just simply divide your gross operating cash flow, okay, with your average investment, no, or book investment. Okay. So anong klaseng investment? Dami-dami kasi dyan eh. Okay. Wala namang mali, no? Pwedeng book investment or investment at market value or average stockholders equity. Halos parehas lang yan. Ang importante, gaya nga ng sinabi natin kanina, it's objective, it's familiar, it can be easily understood, and it allows comparison. Okay? Paano masasabi na it allows comparison? It can become as a standard tool. Okay? So, ayun. Gusto mo ng shortcut? If you know how to prepare the statement of cash flows, which is divided into 3 parts, o ibang subject na naman ito. Kaya ano yung parts na to? You have your cash flows from operations, cash flows from financing, and cash flows from investing activities. You go to your cash flows from operations. That's actually the cash flow that you're going to use. You divide that by the investment and you now have CFROI. Okay, to cut the story short, the higher the cash flow return on investment, ibig sabihin ito, you were able to provide the returns required by your investors. Ayan. And then you also have your EVA, okay, your net economic value added, okay, or your economic value added from year to year. Now, if you're into segment analysis, di ba, from other subject na naman, okay, this is very similar to your residual income. So, wala na niyo. Residual income. If you want to understand EVA, you start with residual income muna, okay? Spoiler alert, the residual income is actually computed by getting the difference of your actual net income less your standard net income. Your actual net income, that will be coming from your operations. Syempre, standard net income, this will be your minimum required rate of return. Now, your minimum required rate of return could be your weighted average cost of capital. Diba? So, yun. You multiply that, okay? You multiply that by your operating assets or productive assets or segment investments. Pare-pareho lang yung lahat yung mga yan. Okay, so if this is your asset or your investment and this is your minimum required rate of return, you expect that this should be your net income from that investment. Okay, so if your actual net income is higher than your standard net income, that is favorable, no? You have a positive residual income. And as long as your residual income is positive, okay, ibig sabihin, you're coming up with good decisions. Now, any decision which will result to a higher or it will result to a positive residual income, that is considered as a good decision, a decision that will allow you to provide the minimum required rate of return for our investors. And if you are able to provide the minimum required rate of return to our investors, anong ibig sabihin nun? You were able to maximize the shareholders' wealth. Okay. Why am I discussing this? Kasi the difference of residual income and EVA is yung tax lang. Okay, dito, actual operating net income yan. Pero pag EVA, you have your net operating profit after tax or net income after tax. Okay? And then, you deduct the minimum required income from investment or expected return from investment. Of course, after tax na naman. Okay. Now, eto may after tax yan kasi yung minimum required rate of return, if this one will be based on, let's say, weighted average cost of capital, you go back to another subject. Do you still remember how to compute for the weighted average cost of capital? You have your cost of debt, cost of bonds, di ba? Yung mga ganon. All of these should be after tax. Ayan, you have your cost of equity, cost of borrowings, and so on and so forth. Okay, so after tax ang gagamitin mo dyan. To summarize, EVA versus residual income, ang difference lang niya ay yung tax. And then you have the total of shareholders' return on investment. Okay, it's not just the income ang i-consider natin dito. No, assignment natin to dapat di ko na dinidiscuss. Pero spoiler lang, shortcut lang natin. Okay, in investment management, the real return on investment is actually computed, or it's actually based on your current income and your capital gains. This is the real money. Okay, they come in the form of interest, they come in the form of dividends. This is your actual cash that you are receiving. While your capital gains, also known as your paper gain, this is actually the change in value. You did not receive this, okay? You did not yet realize this unless you sell your investment. So if you sold, let's say, not sold. You made an investment initially valued at 100,000 pesos, and then after 1 year, that 100,000 pesos is now valued at 120,000 pesos. I hope I'm not going too fast. From 100 to 120,000, so there is a capital gain of 20,000 pesos. Okay? Did you receive that? No. Tumaas lang yung value ng investment mo. Okay? If you want to realize that, you have to sell your investment. Okay po? So, you have your unrealized gain. Pwede yan, unrealized gain. Or losses, which is possible. No? From 100, naging 80. So, you have your loss. Now, you add the actual dividends received. This is now your total income. Okay? So, CI, current income, plus your capital gain or the difference in the value of your investment, you divide that by the beginning value of your investment. I think in finance, there's another formula, pero parehas lang naman yung substance niya. Okay, so paano ba yung formula nila dito? You have current income, cash flow income kung tawagin pa nga eh. You add the difference of your ending balance minus beginning balance, yan, divided by the beginning balance of your investment. Okay, pag minsan sasabihin nila dito, you have your P T, and then P T minus 1, and this is your current value, and then the value after the value 1 period from now. Okay, so it could be in 1 year, it could be 1 quarter, or 1 6-month period. Ganun, basta ayun, depending on your duration or your holding period, divided by the beginning balance. Eto na yun yung TSR mo. Okay, meron yan sa investment management, meron po yan sa financial management natin na basic. Okay, so this is your assignment. I want you to read more on CFROI, EVA, and TSR. Okay, so aside from that, you are going to integrate that, no? May tawag ako. Ayan, sige, hayaan na muna natin yan. You are going to integrate that, no, in your paper. Okay po. So, ayun. What else? And then, if you go to the next slide, taran! We're almost done. The directors and the chief executive alike, lahat sila, no, must have a thorough grasp of all the elements of the chosen measurement. Okay, so it's very important that they should be able to understand, no? Not just understand, pero sa full grasp, a thorough grasp of the chosen measurement. Otherwise, debate over the validity of the index itself may undermine the impact of the objective evidence. Diba? Kapag hindi nila naiintindihan or nagde-debate pa sila, sayang yung time. Instead of evaluating the performance, okay, understanding where things go wrong, okay, and what will they do to improve, and pinag-uusapan pa nila yung tool. If particular members of the board are more familiar with other indices, there might not be a universal agreement. So, what can we do with that? Okay? Sabi, in such a case, individual members might be provided with the comparable data in the index of their choice. Okay, so ayun. If just in case they just cannot agree or they cannot understand the same tool, okay, other members can request for a different tool of their choice. Ay, na mas naiintindihan nila. Yan. What is important is that what all the measures presented, okay, share an ability to capture significant and sustained trends. Okay, so yung mga pinakita kanina. Wait lang, before I forget, no, take note, we are not just limited to these tools. It's just that most of the time, these are the tools that are used to evaluate the performance, okay, of the company. Ayan. Whether strong or weak, which then become the baseline from which to track strategic progress. So, ayun, nabanggit din yung strategic progress. Kanina pa natin ginagamit yung word na performance. Okay? So, sir, what performance are you talking about? Are we just talking about net income? Are we just talking about, let's say, the revenue or the assets? Well, all of those are all part of the performance. Pero, since we are talking of strategic audit, okay, performance now will be defined as our ability or the company's ability, okay, to operate within the mission and objective of the firm. Okay, and how can we know that we are operating, ayan, according to the objective of the firm? Ayan, syempre by using these tools. Ayan. At kailangan i-standardize natin para hindi masyadong maraming tools. Okay, there's another discussion on criteria evaluation, okay, which will focus on the 3 tools that I have mentioned, okay. Yung assignment ninyo, ito. Okay, so ayan. But before that, I want you to research on the following muna. Okay po? So, I guess, if you have any questions, please feel free to ask your questions in the discussion section in our Canvas. Okay po? So, I guess that's it. And thank you.